for business, commercial banks have started implementing a 5% levy on foreign exchange withdrawals in line with new guidelines issued by the Bank of Ghana. The directive applies to foreign currency accounts funded through electronic transfers or check deposits. According to the central bank, the measure is part of its revised framework on foreign currency transactions aimed at tightening oversight of forex flows, discouraging speculative withdrawals, and promoting cash-based deposits. Mr. John Ewa is the chief executive of the Ghana Association of Banks. He joins us via Zoom with the industry's response to this directive. Good afternoon, sir. Thank you so much for joining us.
Thank you, and thanks for having me.
Sure. So is this directive not an upfront to digital banking?
Not at all. What the central bank is saying is very simple, and it's not a new rule per se. You already had it on our statute books. If you have a foreign account or a foreign currency account or with a check payment, then the central bank is saying you need to get your money if you want to make a withdrawal in the local currency, which is the currency or the base currency of the country, the only legal tender in the country. But if for any reason the account was funded with a transfer or a check or any other purpose apart from cash, into the account, then the central bank is saying you need to you give it the money, but you have to pay a charge of 5%.
So how will this new directive affect?
Alternatively,
all right, please go on.
Yeah, so it's very simple. If you funded the same account to say $100,000, you can walk to your bank and withdraw $100,000 over the counter without any charges at all. What the central bank is saying, which operationally, as a community of banks, you also
Unfortunately, we're not getting the stable line for Mr. John Ewa. Mr. Ewa, can you hear me?
I can hear you now. I don't know at what point it was to be.
Okay, so I was asking how this new rule or directive is going to affect traders and individuals who heavily rely on international transfers and remittances.
To me, it has zero negative implication. If you are going to make a foreign currency withdrawal over the counter, the question we ask is, what do you want to use the money for? It's a very simple question. To do what? Because we don't consume dollars or spend dollars in this country. The only legal tender is CD. So if for any reason you need the dollar, then there is a price for that. But it does not have any negative implication. You can make a transfer without any kind of charges apart from the transfer charges that we are already used to. You can pay a third party through a digital payment from the account, and there will be no problems. So the way the funds came into the account is the same way the funds should be utilized. You cannot bring a transfer from, say, United States into the account, a transfer, and you want to withdraw cash. Somebody must move the cash that you transfer from the US to fund the withdrawal you are making. So the cost of moving the fund, flying the specie to Ghana, who should bear the cost? And that is the cost that the central bank is passing on to whoever is making the withdrawal. So for us, we should encourage the use of our own currency. And if you receive dollar or pound or euro, it does not necessarily mean you should come to the bank to make a withdrawal of dollar or pound or euro, because that is not the currency of the country.
All right, so will these measures help put a stop to speculation and also put a tight trap on the cedi's depreciation?
Yes, it should help. We have every reason to believe that when people come to the banks to withdraw over the counter, the only legitimate use for that money is either to undertake some illicit payment or to feed the black market, to take advantage of potentially price differential between the banking system and the black market exchange rate. If we do this and we hold our guns for some time, the market rates will converge. Once they converge, the arbitrage opportunity will be removed. And tomorrow, nobody will come to the bank to withdraw money over the counter only to sell to an allergy on the street. We should all help to safeguard and protect our currency and prevent it from depreciating so that the central bank's fight against inflation will be won and all of us will be beneficiaries of the outcome of the fight against inflation.
Finally, the Bank of Ghana is expected to announce a new policy rate tomorrow. What are your expectations? Do you expect any further reduction in the policy rate?
Generally, one would say, yes, if you look at the market fundamentals, a reduction may be anticipated, but recent events may have may have some impact on the decision of the Monetary Policy Committee. Inflation where it is now, interest rates are down, but unfortunately, the key drivers of the policy change or policy rate change is not basically what we have now, but the outlook. If you look at the outlook, the kind of depreciation we have had in the last 2-3 weeks potentially may have some inflationary pressures. And if that is seen as heightened inflationary pressures, then that may have some implications on whether the central bank may decide to increase it how much or even to where around will be in the horizon.
Thank you very much, Mr. Owoh. Unfortunately, we're not having a stable connection, but thank you so much for your support.